Hey everyone, it is Julie here with TipRanks. Today we're taking a look at two strong buy high yield dividend stocks. So let's get into it. All right, guys, welcome back. Thank you all so much for being here and happy Monday. Today, we're taking a look at two dividend stocks that both pay high yields. We're talking over 9%, and they also come in with a strong buy consensus from Wall Street analysts. We found today's stocks using the TipRanks Stock Screener. Found under research tools, I set my filters to have a dividend yield of high or very high, a strong buy consensus from not only all analysts, but the best analysts as well, and a payout ratio of less than 60%. From there, we had our results down below, and we sorted by dividend yield. So today we're going to take a look at these companies, what it is that they do, those dividend details, and of course what Wall Street analysts are predicting for the stock's future. Before we get into those, this is your reminder that if you enjoyed today's video, make sure you hit that thumbs up button and that you're subscribed to the channel and that you've downloaded the TipRanks mobile app so you can access all your favorite investment research tools on the go. Links will be in the description down below. Now let's jump right into our high yield dividend stocks. First on the list is International Seaways, and this is a stock that we covered a few months ago, highlighting their high-yield dividend. Their stock trades under the ticker INSW and is currently priced at about $53 per share. The stock has seen some impressive growth over the past 1 year, growing 57%, and in the last 3 months has climbed about 11%. They do score a 10 out of 10 on the TipRanks Smart Score, with increased hedge fund activity and very positive crowd wisdom. International Seaways is a shipping company. They are one of the largest tanker companies worldwide, providing energy transportation services for crude oil and petroleum products in international flag markets. They have a fleet of 77 vessels, including 13 VLCCs and 13 Suez Maxes. The fleet itself is considered modern. Their oldest vessels date back to 2007, but most are considerably younger. The company's fleet works under the charter system and moves crude oil, petroleum products, and other chemicals around the world. They have an active program to modernize their fleet and optimize for more efficient operations. When it comes to dividends, the company does pay a regular quarterly dividend plus a special dividend on top of that they adjust regularly to help match management's capital return goals. Their latest regular quarterly dividend was just 12 cents per share, but the supplemental came in at $1.20, and that special dividend would come out to an estimated forward yield of about 9.8%. Since 2020, the company has returned $500 million to shareholders in the form of repurchases and dividends. They'll be sharing their first quarter earnings report in just a few weeks, coming up on May 2nd, and this follows an earnings beat for their fourth quarter at the end of February. For the first quarter, analysts will be anticipating earnings per share of $2.42. Now, this is a decline from last year's, but would be an increase from the previous quarter, where they came out at $2.18 per share, beating expectations by 6 cents. Net income for the fourth quarter came in at $132.1 million, and for the full year came in at $556.4 million. Management noted that 2023 marked another record year for Seaways and their portfolio of tanker assets. During the year, drawing on their substantial cash flows, they continued to pull all the levers of their balanced capital allocation strategy. They said that Seaways has significant momentum and they expect to carry forward throughout the year as positive market fundamentals remain intact. The most recent buy rating on the stock comes from a 5-star analyst, Benjamin Nolan, from Stifel Nicolaus. He noted that things are going very well at International Seaways. Strong market fundamentals are fueling strong earnings, which in turn has allowed the company to strengthen the balance sheet, increase shareholder returns, and renew its fleet. We expect this dynamic to continue, and the International Seaways shares should drift higher as net income is generated. The stock does just have 3 current analyst ratings, but comes in with unanimous buys. And that strong buy rating comes with an average price target of $63.67, which would imply an upside potential of about 20% from current prices. Looking at our ratings down below, they range from an upside of 17% up to 24.5%. For our second high-yield dividend stock, we're taking a look at Rithm Capital. They trade under the ticker RITM, currently priced at $10.92. Their stock has climbed over 54% over the past year, and in the last 3 months has gained over 6%. They also score a 10 out of 10 on the TipRanks Smart Score, with very bullish news sentiment and increased hedge fund activity. Rithm Capital is a REIT, or a real estate investment trust. They invest in a wide range of assets, including residential mortgage loans, consumer loans, business purpose loans, and mortgage servicing rights. In addition, the company also invests directly in commercial real estate and single-family rental homes. Together, this adds up to a highly diverse portfolio with $35 billion in assets and $7 billion in total equity. Due to tax regulations and compliance, REITs are well known for their high-yield dividend payments, and Rithm Capital is no exception. Their current quarterly dividend is 25 cents per share for a dividend yield of 8.83%. Their next payment is coming up on April 26th. They will also be sharing their first quarter results here in a few weeks on May 1st, and this once again follows an earnings beat for their fourth quarter back in February. For their first quarter, analysts will be anticipating earnings per share of 39 cents, which would be a few cents ahead of last year's. And this follows their fourth quarter, where they reported earnings of 51 cents per share, easily beating the estimated 38 cents. Revenue for the quarter came in at $1.42 billion, well surpassing expectations. The company said that over the course of 2023, they executed their growth strategy to accelerate Rithm's transformation and position the business for long-term success. There have been several analysts weighing in on the stock lately, including a couple from Argus and B. Riley Financial. At B. Riley, the company increased their price target, saying that the quarterly results were all around respectable and that their earnings potential remains best in class, showing no signs of slowing with the upcoming closing of their specialized loan servicing. From Argus, they also increased their price target slightly, saying that the results topped estimates and that the market is likely undervaluing its book of mortgage servicing rights. Rithm Capital has 10 current analyst ratings, coming in as a strong buy based on 9 buys and 1 hold. The average price target comes in at $12.10 for an upside potential of over 10%. Looking at our detailed list here down below, on the low end we do have our hold rating with a downside of 3.8%. We have several price targets just shy of 10% and a handful with upsides of 19%. So there we have 2 high-yield dividend stocks, both coming in with a strong buy consensus from Wall Street. Let me know your thoughts on these 2 companies in the comments down below and what other high-yield investments you love. I always appreciate hearing from you guys. If you made it to the end of today's video, make sure you hit that thumbs up button and that you're subscribed to the channel as well. Please keep in mind these videos are never a suggestion to buy or sell any specific stock. Make sure you're always sticking to your own investment plan. Thank you guys so much for watching. Have a great day, and I'll see you back here next time.